चाहिए। और हम लोगों ने हर एक लेवल पे जो है इन्वेस्टर्स को बोला, जहां जहां बाई करना था, जहां सेल करना था। मुझे लगता है 200-300 पॉइंट और यहाँ से है, वो एक बार आ जाएगा लेवल, मैं वहां से जो है प्रॉफिट बुक करना स्टार्ट करूंगा।
Okay, got it. I think we are now also joined by Mr. Vineet Bolinchkar and Mr. Sunil Subramaniam also on the show with us. Mr. Sunil Subramaniam is a market veteran. You've seen him on the show before. Warm welcome to you, sir, and thank you so much for taking the time out. And Mr. Vineet Bolinchkar, you all know, is the head of research at Ventura Securities, and he comes weekly on our show as well. Thank you so much, gentlemen, for taking the time out. Mr. Subramaniam, first to you. Top 3 key takeaways from the Reliance 47th AGM for you?
For me, I think it's a bellwether stock for the Indian market from an FII perspective. So I think in a way it's a mini India. So I think the sentiment around India itself, I think will be favorably impacted by what was announced today. The second is, I think I like it for the vision layout, the strategy. You know, the right from Dhirubhai's days, right, rewarding the Indian retail investor has been a very key ethos, and you should credit them with giving people the confidence of investing in equities. And a statement like today, after 2017, you're doing a 1:1 bonus to reward. It reinforces, you know, you're seeing this retail SIP book grow, you're seeing everything grow, but ultimately it's the confidence of India in two things: our economic growth and our stock market growth. So I think that's where what the AGM's statements today probably played a larger role than just a company specific role. That was the second takeaway. And the third takeaway is, I think that, you know, they've always believed in diversifying into new age areas. So with this mega move into the AI space, 100 GB free storage, then at Jamnagar, they said it's going to do this energy purely on green basis. So I think the direction moving forward, I think is also very, very good clarity. So I think all of these, and I think a nice ballpark, they said that we want to be the top 30 companies in the world. You know, that is a very, very big statement to make. So I think vision was the key takeaway for me.
Right. Let's get Vineet into the conversation. Good afternoon to you, Mr. Bojlinkar. I'm sure you've gone through the entire AGM. The stock, of course, closing at its day's high, and this is the enthusiastic response to the 1:1 bonus. But if you remove all the hype and the glamour that is surrounded with the AGM of RIL, what are the two things that, according to you, stand out and perhaps may help Reliance climb beyond record highs? The market, of course, is clicking away merrily, but Reliance so far has not participated.
So, you know, Reliance has been in a long congestion band. And, you know, the onset and the announcement around the solar modules, I think, will be the trendsetter for what is going to happen to Reliance in the coming few quarters. You know, we are going to see the green economy start, you know, firing for Reliance. And that is a very bullish sign. But one play which I think is very significant to Reliance is Sterling Wilson, because being you know, a subsidiary of Reliance, I think that it would be one of the biggest gainers from the rollouts that the company will do at Jamnagar for its green energy ecosystem.
Okay, let's just check out Sterling Wilson. I remember the IPO at beyond 700, if I am not mistaken, and SW Solar, of course, but SW Solar at that point of time was with another group, and it's Reliance that's taken it over somewhere 2 years ago. So the all-time high, ladies and gentlemen, on Sterling Wilson was on the day of its listing, somewhere in August 2019, 755, and it's breached that for a while in the last 2 or 3 months, but again a sideways trend. With this background and the fact that Sakshi mentioned that I think the first solar wafer will be out in 1 year.
Yeah.
Okay, that's what Reliance has said in the AGM. Vineet, where do you think a good move could be in Sterling and Wilson over the next 2 years?
I think they've got substantial. Their order book is substantial, and but when you compare it to what Reliance is going to roll out, it's going to be adding significantly over and above what the present order book is. So I think that Solar Wilson on declines. If you sip this stock for a few quarters, I think you will have a very good position spaced out. Average volumes, average price, and if you hold for 3 years, 2 to 3 years, I think you'll definitely get rewarded handsomely.
Okay. Mr. Sunil Subramaniam, let me get you on the new energy business as well. Newer statements that are coming in from the AGM indicate that Mr. Mukesh Ambani has indicated the new energy business will become big and profitable over the next 5 to 7 years. They've also already begun work on establishing a fully automated multi-gigawatt electrolyzer manufacturing facility, and this Jamnagar will be the center of new energy business right there. How are you looking at this vertical of Reliance Industries over the next 5 to 7 odd years? How big will it get and contribute largely to the overall top line and bottom line of the company and the conglomerate?
See, this energy business needs huge, deep pockets of capital, right? And so, unless a corporate like Reliance takes a 5-year call on investing in this, right? Otherwise, green overall has been talked about for very long. There's a lot of hype around it, but in the ground reality, we know it's not. But now with Reliance making such clear plans, right? I would say that the kind of capital they can come in, there's nobody else to compete with that. And mind you, there is no need to borrow. They have enough cash in their balance sheet. Because in these kind of new age businesses, those businesses will take time to generate cash flows. So when you look at it from a valuations perspective, right? This period when they are investing, maybe that business will not scale up in terms of its market, the market giving a good share price component to that part of it. But once you cross the 5 years, you cross the initial investment, and the cash flow from that business starts turning positive, that year I will see that there could be a massive jump up in that business. In terms of numbers, in terms of sales and revenues and all that, I think these numbers are too early to talk about.
Right. Let's get Vineet back into the conversation. Mr. Bojlinger, what do you make out of announcements made on Jio Finance? This was the baby that was launched about 18 months ago, and last year's AGM also promised much. But in terms of delivery, there is little to show in financials over the last 12 months or so. There is also this buzz on the Lal Street that there might be a merger in the offing with another NBFC. How do you see the Jio landscape?
See, I think Jio, if it has to take off and achieve scale, it cannot do it organically because there's a lot of stiff competition, and putting things together can take about 2 to 3 years. My bet is that the company will go through M&A activity, and the one stock that I can think of is PEL, which is like a family concern now. It's a very high probability that this company could get merged into Jio, or Jio could get reverse merged into that. Remains to be seen.
Okay. Yeah. So essentially, that planned merger could sort of create a behemoth which is into corporate lending via the PEL lending book and is focusing on retail via the telecom business. Is that what you're looking at?
Yeah, that is what I believe.
Okay. Mr. Subramaniam, do you see this in the realm of possibility, a merger between PEL and Jio Finance?
It's in the realm, but I still think that it's too small. I still think that there's going to be a big mega inorganic acquisition which they will announce. Maybe it's not happened yet, so they've not talked about it. But in the financial services business, right? See, typically if you see Reliance, what do? They put their capital at work and they use aggressive initial pricing to win market share and so-called kill competition, right? In all of their businesses, the two things are go into deep pockets and offer a value package to the customer, which is unbeatable. Now, in finance, that's not easy because finance is a business which leverages on money, right? So anybody with 8x, 7x, 8x, you can leverage. But second thing is you can't do much giveaway to the customer. You see, if you take mutual fund business, which I've run for long, you're charging 1.5%, 2% fees to the customer. Now, if you go to the customer and there are passive funds which are giving it, 10 basis points, 15. So, what is that big saving that you can give to the customer to attract the customer? So, pricing in the finance, in the insurance business, in the thing. So, the key here is to then build scale by kickstarting, by jumping the whole time to take to build a business. So they will look to buy a business which has a large customer base, which already has the customers, and to them they will look at it saying, can I cross sell all of my Geo stroke Reliance products to that customer base? So they'll pay a price for that customer base, which nobody will think is worth it. But in that mind, they will look at that customer as a multi-product user of Reliance stroke Geo interface. So I think a huge mega inorganic acquisition is in the annual in the pipeline, and that's the way the financial services part of the whole thing will scale up and become big. So I think I await that day when that announcement comes.
Okay, Vineet, let me also get you on the retail aspect. You've been closely tracking the retail space across the Indian stock markets, and of course, Reliance Retail has again come out with some more interesting announcements today that they're going to be foraying into the luxe jewelry segment as well.
Yes.
This will be another leg of a vertical of Reliance Retail beyond fashion lifestyle that they have been catering to. How are you going to be looking at this space scaling up within the retail pack?
So the Reliance Retail has been a sort of a dud as far as the Reliance portfolio is concerned. Yes, they've got scale, but they've not been able to achieve the desired metrics, for their sales, same-store sales growth, margins, etc. So I think that adding one more brand or vertical to your portfolio is not going to move the needle much.
Okay. What about you, Mr. Subramaniam? How would you look at the retail space going forward from here? Of course, no announcements were made on hiving off or demerging the business and announcing an IPO, which something that all of us were hoping to listen in from Mr. Mukesh Ambani on both Geo and retail. That hasn't happened. But how would you look at these two spaces, verticals, going forward?
I agree with Vinit's assessments that retail, they have the scale, but it hasn't translated into profitability, market share, those kind of metrics there. I think they will go back to the drawing board there, and they'll have to revisit that business the way they look at it. And going to the high end, the high end, people are not price elastic, right? You are paying for the brand, right? So then what is the value proposition that you're going to give them? Whereas the game of Reliance is, like I said in my previous answer, it's about a value proposition. But the luxury market is not about value. The luxury market is about the perception of that value. So that's a different ball game. And I think they will learn it quickly, they will learn it, but it's not yet there. I agree with Vinit's assessment of that.
Right. Let's get Vineet onto the telecom business. This has been one of those great success stories. It's now the biggest player, launched in 2016, and in a span of less than probably 3 years, you've seen the dominance coming in. Now the main thrust is the Geo fiber. Any other technological innovations that you feel, Vineet, will be available for Geo holders over the next 18 months or so, as far as this business is concerned?
So I think Geo Fiber will now go the FTTH route. You're laying the fiber, but to connect, if you want to achieve deep deep penetration, the most cost economical way is to go via the FTTH route, and
Yes.
that to my mind will be the next lever of growth for because they're looking at offering us portfolio of services in this. So they give you, for a family of 4, they give you 4 SIMs, they give you a broadband, and on top of that, they might also rope in some home security systems, etc. So I think there could be some innovation out there on the product portfolio, more towards the electronic side of the durables space. So that's what I would be looking to anticipate from Geo.
Okay, what we'll do, ladies and gentlemen, is we will shift the focus of this conversation to broader markets. There are more, obviously, news items coming in from RIL AGM, and we will treat them as they come in. Sunil ji, to you. The market's at a record high. There is a tear happening on the Nifty as if the index is going out of fashion and will not be traded beyond September 30th. So anybody who can buy till September 30th will have that advantage to hold it forever. कुछ ज़्यादा नहीं हो गया?
Sunil?
No, Sunil ji, I was just asking if there is just too much of a party on Dalal Street.
Well, when you are in the party, you don't question whether the party is too long or too much, right? You enjoy the party, right? Yeah. One. Second is that if you look at it on why party, right? I think you got to look at three major factors and you see changes around those, right? The first is that I think the US is in a sweet spot for just the US and for the rest of. What is that? You are in a situation where growth is coming reasonably good, but inflation is coming down, which means soft interest rates for longer. So this is an equity market Goldilocks scenario, and right now there's nothing that looks to disturb that. I think you'll keep getting non-farm payroll, this, that, to keep judging. But by and large, the point is, US doesn't look like it's slipping into deep recession. So to that extent, the world stock markets need cheap money, but we need the US as a growth engine because all the Asian emerging markets are exporting to the US. So from an economic growth of the rest of the world, the US growth is important. But for the stock markets of the rest of the world, easy liquidity and low interest rates in the US are important. So that's one Goldilocks scenario that's there. Layer 2 of this Goldilocks scenario is where does that money go? Historically, it was going in large chunks to China. So China has got into a trap where GDP numbers are coming down, this is coming down, the markets have reacted badly. So global emerging market allocations are shifting away from China, and naturally India has been a beneficiary of this. Now the third thing is, from an India perspective, the money flow coming in at the cost of China to India is also, there's another bigger factor for India is our heavy dependence on imported oil. So the one thing which can generally give a shock to FII flows into India, if you studied it, is a undue spike in oil prices happening. So there are news about the wars and geopolitical conflicts, everything, but somewhere oil has remained at its level without showing any sharp breakout signs. So I think these three scenarios broadly, and finally, coming down to India, right? We seem to worry about RBI will do rate cut, but the point is that our growth numbers are fairly okay at 7%. So we don't need to do a rate cut to boost growth. So I think that the focus around RBI will take cuts rate is not needed, because as long as the growth is constant, foreign capital will chase us. So to me, what then is the situation? Like I said, the situation now, the point is, at this point in time, do you do nothing or what do you do? But I think it's a time when you reallocate. See, the overall broader market, I think, will be strong. But there are pockets which have run up very largely on the basis of future growth. A lot of the good news is in the price. But, so because even a small shock to an inflated balloon can burst, right? But there is no signs of such a shock. But my point is that there are equally sectors which are got longer, decent growth prospects, which have been neglected by the market. One case in point which is now catching up is IT. Second case in point is consumption, right? And so at the cost of what's gone up, like defense, energy, and capital goods, right, which have all run up. I think the smart thing to do, right, at the party is to switch from your favorite drink to another favorite drink, right? Don't stop drinking at the party, but just switch the labor of your dreams. Do a sector reallocation, book some profits, take some money, enjoy that money, go buy a Mercedes Benz or a Lamborghini, or take your wife out or get her a nice piece of jewelry, spend some money, reallocate your portfolio, because this liquidity flow, when it comes in, is going to keep buying India. And this kind of a macro flow out of the US favoring India, a significant portion comes to passives. Why do I say this? Passives buy the index. So all components of the index will get an allocation from the FIIs. So one of the reasons for the IT rally I see is partly this. And so to me, these sectors which today are not, IT is coming back in favor very rapidly, yes, but I would still there's juice to run, because very long, if the US recovery will be very good for the IT sector. Second is banking. I know it's even now being iffy movement, but I believe that it's still a good time to buy good quality banks which are correcting. So buying on dips throughout the BFSI space is another good strategy, and keep your focus on consumption, I would say.
Right. Sunilji, you've made Sakshi the happiest person on this floor. So she's now looking forward for a Lamborghini. Obviously, Reliance has launched a line of luxury jewels and jewelry. So she'll be sort of looking into that as well. And yes, this is possibly a time where all those lovely thoughts you had about long-term goals, making a house, maybe sending the kid overseas and investing on his behalf for that particular thing. All those dreams possibly are now coming true, and this might just be the right time to probably take some money away, put it in a bond fund, put it in a fixed deposit, and then enjoy the fruits of labor. So Sakshi, I'm sure you'll be the first customer for Reliance's jewelry line. Yes. Luxury jewelry line.
Yes, we were talking to even Titan's MD the other day and talking to him about Zoya, a luxury store that was opening in Chennai as well, their 11th store. And of course, luxury jewelry lines, that's the newest aspirational line that everybody is opening up. And now Isha Ambani has announced that as well. But let's get Vineet into the picture as well. Vineet, what else looks exciting to you when the markets are at 25,151? Are you still excited to buy more, or would you also enjoy what you have made until now and go for a vacation?
So, I always face a dilemma, because whenever I look at the index, you feel that it's overvalued. And when I go and meet companies, I think that it is undervalued. Yes. So, what I would like to simply, today I met one company, and I will leave you with a very interesting anecdote. If you see the amount of banked economy that is there, it is far smaller than the parallel banking economy or the money lenders economy. Now, these money lenders, actually charge you usurious rates which vary from probably 40% to upwards of 100% annually. And now with this unified lending interface coming into the picture, I believe that this is going to explode. So any consumer, any retail lender, agriculturist, or an MSME entrepreneur, all he has to do is load his documents onto the ULI, and banks will give him predetermined loan rates. This is going to lead to significant drop in this usurious lending rate, although it will be very high for these people because they are coming into the formal system for the first time. But what it is going to do is that it's a win-win not only for the NBFC stroke banking segment, but also for the consumer and the borrower, because their cost of lending is going to come down and the money saved will go into consumption, business growth. And I believe that this internal regurgitation of money is going to lead to a significant boom, which is going to make India grow faster than even the best economists out there think about.
That's a wonderful thought to sort of pause the show on. But Vineet, knowing that you will translate this macro move into what will benefit the most on Dalal Street, what are you looking at? Improving upon NBFC lenders or technology companies that will trigger this macro move into, how should I say, a catalyst for the broader economy?
So I am very bullish on these catalysts, which are the guys with the distribution reach. Paytm for one. We could look at the other lenders which are there. The fintech companies. I think they are going to explode, and I am very very bullish on the digital ecosystem. Going out from there, we've hardly seen anything happen in there. Actually, I think it is going to explode beyond everyone's imagination.
Okay, so what we'll do, Vineet, is that this show draws to a close, but I'll extend an open invite for you to discuss your research report on Paytm, which I think runs into 31 pages. We'll discuss that in broad detail. Remember, Paytm is perhaps the only internet listed stock which is still below its in hindsight an overinflated IPO price, and stocks such as PB Fintech, Nykaa, Zomato, Delivery and one more have now sort of reclaimed previous glories, but Paytm is left. We'll wait for Vineet to discuss that, but that will be on a different show. For now, thank you so much, Mr. Subramaniam and Vineet ji, for this lovely conversation that we had, not only on Reliance's expansion plans but also the markets.
Thank you so much.
With that, Sakshi and I sign off, but remain glued to Business Today television. There's lots on the other side.